If you're looking to buy a franchise right now, you're likely wrestling with a very specific trade-off. You want a scalable, resilient service business, but you want to avoid the massive real estate build-outs and bloated payrolls that typically define the industry. Look at this matrix. Plotting traditional franchise models by initial investment and overhead reveals a dense cluster in the top right quadrant, the high capital, high overhead zone. But down in the low capital, multiple revenue stream quadrant, we find a much more isolated option, ATAX. For a lot of investors, the immediate mental roadblock with the tax and accounting sector is the calendar. People assume it is strictly a seasonal gig. That perception creates real cash flow anxiety. Nobody wants to make all their money in April and then face negative cash flow throughout the summer months. Successfully bridging that revenue gap without artificially inflating your overhead is the primary operational hurdle for any financial franchise aiming for year-round viability. ATAX has been operating since 1986, and they built their national footprint by focusing directly on serving multicultural local communities. Their answer to the seasonality problem was an operational shift. They moved away from the pure tax prep model and rebuilt the business as an integrated financial hub. This flowchart shows how it works. Instead of one service, 5 distinct revenue streams feed a 12-month timeline: personal tax, business tax, bookkeeping, payroll, and incorporation services. Adding ITIN applications supports the core demographic, feeding directly back into the tax cycles. We are going to break down the real-world investment metrics of this setup to determine exactly what type of operator actually thrives in this system. Because to make the ATAX model work, you have to shift your mindset from processing seasonal transactions to building year-round B2B relationships. Let's look at the financial barriers. This bar chart compares a standard retail franchise build-out, often north of $250,000, against the smaller $59,000 to $79,000 investment for ATAX. Breaking that down, the liquid cash requirement sits at $35,000. This lower entry point changes the debt-to-income calculation for a new owner, providing a more accessible starting point than businesses requiring mid-six-figure loans. But skipping the expensive build-out comes with a direct trade-off. Because you aren't paying for a massive, highly visible retail footprint to drive organic foot traffic, your customer acquisition strategy has to compensate. You have to replace real estate visibility with what the franchise calls guerrilla marketing. In this specific playbook, guerrilla marketing means relentless local networking, hands-on community engagement, and grassroots outreach, rather than relying on passive advertising. You are strategically swapping real estate debt for hustle. The low upfront cost keeps your working capital safe, but it places the burden of actually getting clients squarely on your own local presence. Here is a proportional breakdown of the ongoing financial commitments. Out of your gross revenue, 14% is allocated to royalties, and 3% goes to a national ad fund. Those percentages are higher than some standard service franchises, which you have to weigh against that unusually low initial startup cost. But those fees provide direct access to highly developed bilingual marketing systems and a comprehensive training infrastructure. You are tapping into an executive team at headquarters with over 140 years of combined experience in the tax and accounting space. The operational trade-off is straightforward. This structure is designed specifically so you never have to invent your own operational or marketing systems from scratch. If you are an operator who wants complete autonomy to build your own custom back-office systems and local branding, this fee structure will likely be a source of friction. The higher royalty fee acts as a mandatory subscription to an established playbook. You sacrifice some top-line margin in exchange for speed and operational reliability. Looking at the day-to-day operations, the ATAX model runs extremely lean. You can launch and run this business with fewer than 5 employees. Keeping the headcount that low results in exceptionally low payroll overhead and vastly simplifies your human resources management. This node map shows the operational trade-off required to make a small team highly profitable. You, as the owner, must be heavily involved in actively cross-selling the 5 different service lines across your client base. You have to step away from the mindset of just processing seasonal forms and position yourself as a year-round B2B consultant for local small businesses. Demographic targeting is central to this cross-selling strategy. You need to focus on serving multicultural communities effectively. Deploying bilingual staff gives you a clear advantage when it comes to capturing market share in Spanish-speaking and other immigrant business communities that are often underserved. The trust you build while helping someone with a basic ITIN application or a personal tax return is the exact leverage you use to secure their future business bookkeeping and payroll contracts. A lean staff keeps your overhead safely contained, but it forces you to be highly hands-on in relationship building to guarantee that year-round cash flow actually materializes. The ATAX opportunity is essentially a high-leverage, low-overhead financial hub built entirely on community trust and multi-service utility. This makes it an ideal fit for the corporate escapee, a professional seeking local ownership who wants to avoid the logistical complexity of managing retail food service or high-inventory businesses. It is also built for the community leader, a bilingual entrepreneur who explicitly wants to serve and legitimize businesses within their own multicultural demographic. Finally, it works for the multi-unit optimizer, an experienced operator looking to add a lean, recession-resistant B2B service to their existing portfolio. Regardless of which profile fits you, the non-negotiable operational requirements are identical. You need local networking stamina, the ability to execute guerrilla marketing, and a willingness for hands-on leadership. Look at this decision matrix. The required traits, B2B relationship building, bilingual capability, and guerrilla marketing, reveal the absolute disqualifier for this brand. This franchise is not a passive absentee investment. The ATAX model successfully swaps massive real estate risk for local relationship responsibility. It heavily rewards the operators who are willing to execute a proven playbook right in their own backyard. If you're ready to review the full financials, check territory availability, and evaluate your fit with the brand, click the link in the description to visit the portfolio evaluation website.